What's up, everybody? This is Jimmy with Trading Decoded. It is 2/17 on March 7th, 2025, and another amazing day in the market, albeit extremely expensive, way more expensive than even yesterday. This is getting out of control. However, if you can get past that, just like yesterday, the chart did some pretty nice things, and we had some very good call-outs today. Yes, you heard it, call-outs. Guys, can we see the future? No, of course not. But can you stack probabilities in your favor and be prepared to take advantage of those probabilities before before they happen? Absolutely. Does it guarantee that they're going to win? Of course it doesn't. But the win rate in here is pretty damn high. If you want to listen to the recordings, I'm going to start making some YouTube shorts based on some of these things that we find. But in the meantime, if you're watching this, we're just going to go over the charts like we always do. For the people that watch my videos, which are the people that are already in my community, you know what you heard. You know what we talk about all day long. So I'm not going to beat your heads over the idea of trying to convince you that we find these trades before they're really trades. So without further ado, go ahead and buy my book before we jump into the charts. It's good. It explains a lot of things and sets up all the probabilities that we look for day in and day out in these charts that end up becoming, more often than not, pretty decent trades. Not always, though. Now, everybody loses, and that's just part of the business. But check it out. It's a good read. It's got great reviews. It's awesome. That said, let's go ahead and jump into the charts. As always, we do our call put scenario. I'm going to focus more on the Qs chart because this is where I take all of my reasons for my entries and my exits. If you don't know why, just ask in the questions down below and in the comments, and I'll answer. But again, for those of you who watch my channel, you know why. But long and short of it is, we had a put line on the Qs at 486.81, a call line at 488.34. If we get above 488.34, I'm expecting us to make about a 70-cent move minimum, all the way up to 488, 489 basically. And ADD was pushing up. We were coming off higher lows on the Qs. We broke resistance. We got above that line and went straight up that 70 cents. Now, if you tried to hold on that for too long, you got to eat a big old fat red candle. This is, if you're going to play aggressive at the open, guys, I don't recommend that you try and hold these trades expecting them to last forever. Okay, sometimes they do and you leave a lot of money on the table, but these are quick, aggressive trades. We're looking for a quick break of resistance, run up to the next resistance. Likewise, if we're going to the downside, we want a quick break of support to run down to the next support. Easy peasy, okay? That's if you are an aggressive trader. That's what I like to do. I like to trade these because I don't want a chart to give me a chance to not trust it anymore. Because if I start to not trust the chart, then I have a much more difficult time trying to take a trade comfortably. With that said, I did not take the call scenario because I had switched back over to the potential for puts. I started out looking for puts. Once we had a big green candle, ADD was printing green candles. I said to everybody, I'm looking for calls. Then we started to struggle up here, wanted to switch back to puts, didn't execute anything. And then while I was waiting for something to happen, we ended up closing above the call line and I just missed my opportunity. No problems, but a lot of people took that and I'm happy about that for them because that was a good 70-cent move, guys. 70 cents is a big deal. Especially when it happens in roughly a minute and a half. Okay, that's how we get paid. Then we hit a resistance and came straight back down to support. The support that we made in pre-market, which is why the put line was below that. We wanted to get below these supports so that we can make a move down to the next support. But it never happened. Then, as we were moving up, we put in a higher low right here on Qs, SPY and Qs pulling back to support. However, ADD was printing a red candle. So not a good entry for me there. We move up, coming off of higher lows, we pull back. It's at this moment that I'm telling everybody, guys, we're pulling back to support on both Qs and SPY. And guess what? ADD's printing green now. This is the time we want to take our calls, at least the time I took my calls. Got in here. We made it through the resistance, right to the next resistance. As you can see here, I'm sorry these charts are small, but these are decent sized moves, guys. The thing is, I sold out of this trade a little early. I'm not going to lie. I got a little bit nervous. Nvidia was kind of breaking a support level, kind of. and we were struggling to move higher, and ADD printed a decent sized red candle. I took myself out of this trade here, so it was only a 9.1% win for me. However, what was annoying to me and what I didn't follow of my own rule, which I should have done because I would have made a lot more money, was the stop loss on this trade was, because we got in on the pullback, was if we closed back up below the resistance that we just closed above. So this blue line was our stop loss. We never closed below it. And again, for the people that hung on to that trade for all the right reasons, you got to take the benefits that was the continuation of that move up. I did not, okay? These trades were super expensive today. You know I trade SPX, and these things were averaging $3,500 a contract. Expensive trades today, okay? And that does affect me. It is what it is on a crazy day like this. I could see the chart fine, but when it starts to, I'm just a lot more hesitant. That's all. As far as wanting to hold longer, okay? But it did what I wanted it to do, and it achieved it. I just wanted to hold out for a little more because ADD was looking good. Things in the top 10 started to turn green from red. Like, it looked better to the upside, and I did make multiple mentions of that along the way. I said, guys, this still looks pretty strong to the upside. I shouldn't have sold out of my position, and yes, this was before I got out here, but nonetheless, we do close finally above that resistance, putting in higher lows, expecting it to go up to the next resistance. It did all that. Again, we turned that line of support, or what was resistance, into support, push up to the next one, but we closed below it here. So under normal circumstances, had I still been in it, I would have stopped out on this trade here otherwise, because every time we break and close above a support, I need that to become, above a resistance, I need that to become a support, because that becomes my trailing stop. All right. Doesn't mean it's going to go down from here. Not at all. All right. We have rules for when we go from calls to puts. This does not meet that rule. We ended up finding support here and pushing up, making it through that most recent resistance, right back up to the next resistance. And once Q's and SPY hit resistance at the same time, which they did several times along the way, I start telling people up here, I said, guys, we're struggling to move higher on both charts. If ADD starts to print some red, we're going to get a pullback, and it's not going to be one you're going to want to hold through. Lo and behold, ADD started to print some red. Both charts were at resistance. You don't want to hold your calls through that situation, okay? Now, I wouldn't get into puts there either, just because things were looking pretty strong to the upside. But what is our rule? Well, we want to break the trend line and get below the most recent level of support. That is your entry for puts. Well, that happened here on this candle. But we had another support, which was right here. And I had said loud and abundantly clear during the printing of this 957 candle, guys, this is what I'm looking for if we put in a lower high here. I'm expecting us to get below 489.80, and then I'm looking for a drop straight down to 488.34. Now, that's a pretty good move. And look at where that stopped. I took this trade. I got in a hair late because I wanted to make sure that this candle was going to stay a lower high. ADD was printing red. All of this was called out way before the trade. Now, whether you took it or not is up to you. Don't be mad. I'm just trying to point out the setups. When confluence, that is red ADD, red Qs, red SPY, break support, down to the next support is a thing. We want to take advantage of that. And advantage we took. That trade ended up being an 18.1% win in just over a minute, which was my second and final trade for the day. And again, I was looking for a very, very specific level. Why a break of support? Well, because of lower highs. That usually means we're putting more pressure on support. It's more likely to fail. ADD's printing red. That's additional confluence. That gives me the okay to be more aggressive on my entry. If we do all those things, I'm looking for the next support down. Well, if you look at this chart from here, the next attempt that we tried to move down and couldn't was right here. That's where our target was. 18% in 1.5 minutes. Beautiful trade. It held support there. We bounced off of it. Hit the next resistance up. Again, guys, if you're looking for calls, and you decide to buy down here, which was not something I was willing to do or suggesting, you want this thing to run up to the resistance it just came from. If it doesn't make it there, it's a lower high, and then you'd be looking still for puts and expecting support to fail, right? This is what we're looking for. It's not hard to do. You just got to learn to trust this process because it works way more often than it doesn't. And this is what I spend my days doing every day for the people in this community. Today was a fantastic day if you were patient and you could swallow the pill that was the cost of these trades. All right, so resistance. If we would have gotten above that resistance, we were looking for it to go up to the high of day. We didn't get above resistance. We held it and we started to rotate down, to which I said, guys, we got another lower high right here. If we can get below this support, because of the lower high, I'm expecting it to fail and come down. We're looking for this orange line down here, all the way down at 487.38. Okay, now this was an aggressive entry here, and it did get a little uncomfortable because, as with our stop losses when we're in a profitable trade, if you get into a trade like this, you have to give resistance a chance to save you. So that said, this pullback right here was very, very close to becoming a problem. Now, if you're trading mechanical stops, you got stopped out on this trade. If you're trading candle closes as your stops, as I do, you got to hang into this trade barely. You see this double top right here? That was your crossing line because we would have expected a close above that to bring us all the way back up to this orange line. You don't want to hold through that, okay? However, if you did hold, we did suggest after several touches of this support being touched, consider taking profits here. So you could have gotten out while things were slightly uncomfortable, trying to pick a determination as which way this was going to go. ADD was still chopping sideways, but more of a downtrend than anything. SPY was looking pretty good as far as lower highs on its chart in downtrend. So some people held on to the trade. Again, I was not in this. It doesn't matter. But the stopping point was right here, and we almost got stopped out of that trade. However, what a lot of people were waiting for was a close on SPY below this resistance, okay, or this support. Keep getting these things backwards. So we had support levels on these charts. They just weren't proven, during trading hours, right? These are lines that, well, I guess on SPY it was. This would have been that target we were looking for from here to here. But I was trading the Qs chart, right? So if we get below this, I'm looking for the next one down. We got below this. I'm looking for the next one down. Ultimately, it got there. But after that, once again, both charts had an opening because I had said in here also, if we get below that 487.38 line, guys, I'm looking for at least the pink line. Pink line is the stink line. Boy, did we get a hell of a move from that. Once again, called out before the trade. I have the receipts, the recordings. If we get through this level with a close, I'm expecting at least the pink line. We close below the pink line, so we're looking for the next line. We close below the next line, so we're looking for the next line. We close below that line, so we're looking for the next line. Guys, it just works more often than it doesn't. You do not have to trade it, but just take away some of the information I'm giving away in these videos, okay? Use it. Try to apply it. Take mental trades. Take paper trades. I don't care what you do. Give it a shot. Use your eyeballs and have some confidence in understanding how the market works. You don't need indicators all over the place. You don't. All right? Now, as you guys have heard me say, if you watch my videos at any length of time, when we get to an area where there's multiple lines in close proximity of each other, assume that that's going to be a stronger level to get through. Okay, now what does that mean? It means if you're holding on to puts and we near this area of 3 lines in a row, maybe you should consider tightening up your stop losses, hope that we can crash through all 3 of them, but if we don't, you get stopped out before it reacts violently and costs you a small fortune. So the stopping point on this for the people that were still holding was if we close back above this most recent lower high, you have to stop out if you weren't going to take your profits down here. So with that said, this yellow circle means this would have been our stopping point if you tried to hold through this. Otherwise, just accept the fact that it's a strong support area. We don't know if it's going to hold or if it's not. It doesn't matter. Just be prepared to react in some way or the other, whatever your plan is. So stopping points here. Now, are we looking for calls? No, we're not. However, let me squish this up a little bit. We found ourselves in a wedge. Now, I was being asked, Jimmy, how would you draw this wedge? Because it was kind of ugly. So we drew it on both charts. And I said, guys, the normal rule is if we break the wedge low and there's room for support, or between that wedge and support, that's where we want to go. The one line that we always have to watch out for, guys, is the pink line. The pink line on either chart is something you don't want to mess with. So, smartfully so, that's probably not even a word, Qs got below their pink line, and for the most part, they stayed below it. But they never did get above their most recent resistance, which was right here. Okay. So folks were waiting, rightfully so, for a close for a below or a breach below or whatever. I would say close. We waited for the close below the pink line. And what were we looking for in this trade? At least a move down to here, which had happened 1.5 minutes into the trade. And if we got below that, all the way down to here, the low of day, the same place that we were looking for before. And on the Qs, we got both of those levels. And once we close below them, guys, you got to assume we're going to move down to the next one. And again, ADD was moving down pretty comfortably. So this ended up turning into a good move. Then, if you stayed in the trade, we put in a lower high. We stayed below that resistance. Lower highs means what for supports? It's more likely to fail this time, not hold. Well, we talk about all that every day. ADD is still trying to move down, lower high. If you're still holding on to puts, this has a better chance of getting through that support. And it did exactly that, and we got down to the next support. Now, I stopped drawing lines on the chart. Why? Because by this point, everybody who was going to trade today was pretty much done. We had nice moves up. We had nice moves down. We got to play both sides. So I said, guys, we're not even going to put lines on the chart at this point. Why? Because maybe that's the reason some of us are taking our profits too soon. Let's just trade below this level and see what happens. Okay? Well, we got a pullback. 2, resistance on both charts. Resistance right here on SPY, resistance right here on the Qs. ADD at the time was printing red. Let's go. Where are we looking for? A minimum of a move down to the same support. Now, this doesn't look like much, guys, but that's a $1 move. Okay? It did take a second to get going, but ultimately it made it right down there. And it continued to go down shortly thereafter, but not by very much. So stopping point was, once again, if we close back above this lower high, we get out. So if you tried to hold for longer, you got out basically at the same point you would have gotten out at if you just got out the first time. Whatever. Then we start to move up. Now, it's at this time. It was right around this candle right here at 12 o'clock because I was about to get off the mic. Somebody had asked me, Jimmy, when would you consider calls? I said, I would not touch calls. And this was for several. In fact, I think it was asked before 12 o'clock because I remember having plenty of time to explain it. I think it was all the way over here. But either way before what happened. I said I would want the Qs above 483.57. I'd prefer that they're coming off higher lows, and I'd want ADD printing green or in an uptrend for me to take calls on this chart today. Okay, at this point. Guys, we came close to it here. Rejected. Good. ADD at the time was printing red candles. Not something I was willing to take. We pull back. We move up. It's a lower high. Right back here on support. We start to move up. We put in the higher low. The lovely, so lovely higher low. And at this time, ADD was resuming its uptrend like it had started earlier. We got, whether you played because we cleared that level pretty forcefully or you waited for a candle close, we were looking very first for 484.68. Okay? We had a bunch of people take this trade. And it's not how long you stayed in the trade that matters. It's why you got into the trade that matters. Everything I had told you guys 20 minutes, 30 minutes, whatever it was, 15 minutes before this happened, you had plenty of time to make a decision. But a lot changed between the time I was asked the question and the time we finally got the opportunity to take this trade, which again, I was not on the mic at this point and I don't trade without my people. So all we had to do was get that move above this level. It was going to make Q's, SPY, the market had to work to get there in the first place. If we got above it and ADD started to move up and started to get more fancy schmancy up to the upside, I just want to show you that after that entry point, which we called 15 minutes at least in advance, made it all the way up to wherever it ends up going. And at this point, so where did we get into that trade? We got in, depending on when you got in, but we'll just call it halfway. We'll split the difference. 483. We'll call it 484. You got into the trade. Okay. Right now, if you held it the whole time, we're at 492. That's an $8 move. Almost $9 in this move up. ADD stayed printing green, stayed on an uptrend, had some nasty pullbacks that I probably wouldn't have held through. But the point is, we got to find a great opportunity that turned into an amazing trade. Whether you took out at the first line, the second line, the fifth line, or at the top is irrelevant. The point was we spotted a place on the chart, followed up with some extra forms of confluence to justify taking the risk that was that trade. Every trade is a risk, but stack the goddamn probabilities in your favor and you can have a much higher win rate. I'm telling you, trading less will produce higher win rates. Okay? There's a lot of things that could make you a better trader and a more confident trader and a more profitable trader. You just got to accept that the way you're doing it, if you're losing constantly, is not the right way. Okay? So if you're interested in learning how we do this stuff, guys, consider buying this book. It's spelled out to a T. Everything that we look for and what we do all day is in that book. And believe it or not, for the members in my community, which blew me away, they're getting even more information out of that book than the amount that they've learned from me over the course of a year in the trade room. So I don't know if it's just because it's in black and white that it's easier to digest, or if it's no stress because you're not worried about, what's going on the charts in real time. This is useful information. Okay. Even if you don't trade my style, understanding why the market is doing what it does, why it's important to know where buyers and sellers exist is beneficial information. As a day trader, if you're a swing trader, none of this really matters. Support and resistance, it runs the market. It runs the market. Every strategy, every indicator, every pattern you try and trade on the chart all stems from support and resistance. All of it. So learn it. It can't hurt you. It's way better to know and way less complicated to learn. All right? So we're going to wrap it up. If you guys got any useful information in this video, please like, share, and subscribe. If you'd like to join our Discord community, well, I'd love to have you. Your first week's completely free. No credit card signups, no nothing. You just show up. Your free week starts the day you enter, and you have access to everything as just like a paying member would, minus a couple of things. But besides the fact, it's super simple. You don't believe me what goes on in these videos? That's up to you. Come find out for yourself. Guys, I'm trying to help you do this better, right? For me, I don't need to have this Discord. I like it because I think I'm helping other people change their lives. That's what drives me to do this. Plus, if I stopped working after I was done trading, I'd be out spending the money that I'm making, and that ain't good for me either, right? I get bored and I like to spend money. It is what it is. This keeps me busy and it makes me feel good because I know for a fact I'm helping people every day. I know it. It doesn't work for everybody because emotions are a real thing. It's what makes people fail as day traders. It's emotions. That's your ability to understand what you're seeing and when you should and shouldn't be doing something about what you're seeing. Okay? That's easy to teach. What I can't teach you, I could tell you till I'm blue in the face how you should feel and how you should react, but we all know that that's not the way it works, right? And if you don't trust the process, then it's not going to work for you. So I spent all this time making these videos for free for you to help you see what you should be looking for. Start putting it into practice on a paper account. Take mental trades. Use the rules. Higher lows are bad for puts. See how many times it would have kept you out of a put you would have otherwise taken, but didn't this time because of the higher lows, right? If you're looking for calls, higher lows are good for calls. Check your ADD. Is it printing green? Great. We're more likely to break resistance. Take the mental trade. See if it would have worked. Start taking notes about how often these things work and how often they don't. I think you might be surprised. All right. So with that, I hope you all had a fantastic day. I hope you have a fantastic weekend. And watch out for my first couple of shorts over the weekend. I got to learn how to edit those and make them interesting. But I love you guys to death. Thanks for watching. Till Monday. See you.